Alright guys, today is a very exciting day. This is the official release video of an indicator called volume bubbles. Now, this is an indicator that I've been working on, honestly, for the past decade. It has been a desire to have this indicator, but really, there just has not been an ability to code this with the current versions of PineScript until PineScript 5 and 6 came out for TradingView, as well as the advent of AI. This was actually completely programmed with AI. There's no way I would attempt to hand code this as I have past indicators. There's just the logic it uses is far beyond anything I could sit down and educate myself on. So without further ado, guys, this is the video to explain to you what this indicator is and just the power behind it. There are many features to this, but at a base level, what does this indicator do? This indicator is built to identify large areas of buying and selling by what we typically refer to as whales or institutions in the market. This works on cryptocurrency as well as stock tickers. Now, what I'm going to do is I'm going to go through this indicator with you guys, and I'm going to start with the settings, and then we're going to get into the really fun part and talking to you guys about how to actually use this to incorporate it into your technical analysis as well as your trading, because there's significant points you need to see that I think, well, I've already seen, it's given us a huge edge. And funny enough, it almost feels like insider trading, but it is not that. You'll understand what I mean here in a second. Okay, the volume multiplier. So volume multiplier, I suggest you guys keep this between a 1 and a 5. Now on the daily time frame, go ahead and keep this at a 1. If you're going to drop down to like the 2-hour time frame, maybe just go ahead and put this at like 1.3. What this is basically doing is it's not messing up any of the volume. It's just basically adjusting our bubble size to let us see where a larger volume went through versus lower volume. And on the daily time frame, I would just go ahead and keep this at a 1 for now. Now, the volume average length, what this does is that it actually looks at the past volume period. So let me take a moment to explain this. A regular volume chart that you see at the bottom of your charts, okay, it shows where volume went through. One of the beauties of this indicator is that it is looking at the past average candles and looking at the ATR range. Why is this important? In a market that's very volatile, in price actions moving up and down quickly, and large transactions are taking place, there is a certain amount of volume within that period of time that you need to be keen to. That same amount of volume and same indicator parameter in that volume time frame cannot be used in a smaller consolidating pattern. Let's just say the lower volume pattern, because none of your bubbles are going to show up. So one of the, honestly, kind of secrets behind this secret sauce code is that it's actually pulling a duration of time frame to look at the past volume to accurately update the volume bubbles so you can see when new volume enters into the market. One more time here. High volatility markets going up and down, you're going to get certain size bubbles. If the indicator doesn't adjust to small consolidating areas, you will never see where the whales are actually buying or selling within consolidation to get the magic move, okay? One of the most, if I can say this, coveted indicators for traders is to find in a consolidating period where are whales or institutions placing their bets, because the market is typically going to run in the direction of where the most volume is placed. And we've been able to see that, and I'm actually going to give you guys examples of how this called the biggest liquidation event in history on crypto, as well as one of the fastest stock market crashes we saw in October. And I'll show it to you guys in 1 moment here. Minimum circle size, maximum circle size, you guys can adjust this. I would just leave it here. I like to give you guys just the ability to play around with things. So I know some people really like dialing things in. So most of you guys just keep the indicator settings where they're at and focus on this part of the video. Having bubbles visually is one thing, but being able to code in, which we've been able to do, the exact API volume on each candle is a game changer. Okay, being able to see a bubble is great. Being able to see, volume come into the market here and say, I think the market's going to head up is visually a nice thing to have. But to be able to see the actual volume difference, I think makes a significant difference in our analysis. The reason for this is that we can actually start doing analysis based off mathematics, looking at the selling volume in the market compared to the buying volume. And if buying volume can outpace that of selling, then it means sellers got absorbed. It's a new term that's going around trading here in Q4 of 25, and I'm sure into many years in the future. It's been here for a bit, just being talked about more, is when sellers sell into the market, there's an absorption factor. Case in point, when sellers sell into the market And we can see that there's 8.4 thousand Bitcoin volume on this candle and 9.1K volume on this candle here. What I'm watching for is what is called absorption to take place on buying candles. And when I can add up 9.6 thousand, and I know that's completely absorbed this entire selling candle, as well as 8.4 is being absorbed in this 5.5 and the remainder of this 9.6 and also the 6.8 here, I can tell that there's an absorption period happening here where these sells and these shorts are getting squeezed. And I can tell that not just based off bubble size, because a lot of these bubbles seem to look the same, right? However, when you look at the back and look at the volume, this is where you guys can actually start doing math equations to say, I see what's happening here. Buy side volume is matching that of sell side volume, and we are looking to go into what we call a short squeeze. This is where we get to the next part of this indicator, which is quite revolutionary. What I've done to leave the volume on here for us is I've actually built in short squeeze horizontal lines. Now, how this indicator populates these bubbles is at the close of the candle only, it will give you a red bubble at the top of a red candle wick and at the bottom of a green candle. The reason why it's at the top is because we want to say, what is the point of almost no return for these sellers? It is when all of them get squeezed at wick high upon a high selling volume candle. As well as we want to know on a bullish candle, where are they all going to get squeezed? It's when price moves down below structure low on that candle. So what we can see here is a very clear play that played out. Sellers moved into the market. They dropped the price of Bitcoin. This would work on stocks too. We see the absorption phase, and we see the moment that price on this candle comes back up with 5.5K volume on buying, we started to liquidate this 9.1K in selling. The absorption started taking place. These guys right here start freaking out and have done a couple things. Either they've taken profit, which I don't think they took much profit because it was all encompassed within one candle. And if there's this much selling power, the thought and objective is probably to have price go lower. They are getting squeezed. Once price ended up crossing the second area of shorting or selling in the market, there was a very high probability they were all going to get squeezed in the markets and go straight back up. How do we know this? Well, we can see volume as well as we can see the size of the purchasing entering back into the market. This is what's called a short squeeze. And this works both ways. The big drop that we saw over here, there was 11,000 Bitcoin purchased on this candle. Why was there a squeeze? Because we actually pushed price down below most stop losses on everybody who went long here. So you can now see in the market, here's the deal. If you don't have this on here, how do you know what candle is going to get squeezed? You don't. You need to know which candle has the most volume. And there's this misconception that larger candle lengths have more volume. This candle length here, many people, if they take this off, are saying this candle, I guarantee you, has more volume than this candle. That's just not true. And it's a misconception that's cleared up by this indicator quite nicely. This is 9.6 thousand. This is 11.7. It's very clear. So visually, we cannot be trading and say a large candle has more volume. There's actually many doji candles that have more volume than larger candles because it is a competition between buys and sells. A candle that moves rapidly in one direction can simply just mean there was less aggressive sellers during that period, and buyers just simply outweighed sellers in a shorter duration of time, which within that 1 day time frame, price went up easier in a higher direction, okay, or a lower direction for bearish candles. Let's take this to another level. With this on here, I said, okay, we know how to find short squeezes now. We have volume. We can visually see where the wells are into the market. But one thing with indicators, and I've covered this for many times, is that there is a metric that is felt to be appreciated. In oscillators, you have oscillators that go between a range. And the reason why we all love oscillators is because they're pinned to a range. When metrics are oversold to the downside, this is typically where people look to say, all right, I feel more comfortable buying because we're oversold. I feel more comfortable selling if we're overbought. To gauge the accuracy of a current signal on an indicator, you must do so by looking at its past readings and how market was affected by the current reading of the indicator. So what I've done here is I've given us the ability to actually look at the volume difference of large bubbles. So let's just say a large bubble comes into the market of selling volume. Clearly, that's what we just saw in the cryptocurrency market. Well, I want to see how has this impacted price in the past. If you come over here and you click this, you can actually filter out every single bubble that has a large volume, that has a normal volume, small and tiny. This tells us, all right, I've woken up in the morning, I see a, for example, normal sized buy bubble. I want to now know what has been the reaction in the market when this type of metric reading has appeared previously. And now you don't have to go back and backtest, just look for yourself and see what has happened. When large bubbles like this have entered into the market, there has typically been a downturn in the market because wells are selling. It's very clear. High volume sells are typically going to push the market down, where conversely, let me get my face out of the way here a little bit, move this to the right side. When buying comes into the market, typically this is where the price is going to find appreciating states. And so now you've got a way to kind of visually backtest into the past, quite a bit of time here to see what has the accuracy been in the past to give me validation of what could be happening coming up here. Okay. And you guys can go through here and adjust this as well. What I want to do now is I actually want to pull up the Telegram channel because I want to show you guys these are some posts that I do in our Telegram, and this was just blowing me away. So let me pop this up here for a second. What you guys are seeing is the volume bubbles on the consolidation zone before the stock market collapsed. Okay. And I know if you guys watch this in the future, that this was the October to 10th crash that we saw in the stock market as well as cryptocurrency, largest liquidation event ever in crypto. When I looked at this and I could see now behind the scenes what wells were doing, it is very clear to me that if I look at the consolidation pattern, let's just take this bar out of it, that the SPY was printing, were there more wells bidding on sells in the market or buys? There's unquestionable. Let's forego this candle because I know that's the rock. Let's just look at this right here. Look at how many selling volumes were in here. 1, 2, 3, 4, 5, 6, compared to 1, 2. So we've got a 3-to-1 ratio that wells were taking out sells in the market and correlating to shorts in the market before the stock market crashed. Well, I wonder if that was a key sign. This is why I'm saying it almost feels like a little insider trading, because your volume metric on a normal TradingView chart is not going to show you guys this. This told me that, okay, heads up, something big is coming. The buys could not absorb all of the selling. And what happened? The moment they tried to cross back up here, it didn't work. Another selling came into the market. This is rejection. Remember, guys, in a consolidating period, the golden goose, if you will, for metrics is traders want to know, where the heck is this market going to go? Is it going to squeeze to the upside or downside? And when you have a metric like this, it actually shows you where volume is being placed on sell side or buy side volume. Typically, you can actually forecast which direction the market's going to go, which correlates to a whole lot of stake and money for a lot of you guys. Okay, let me show you this to you guys as well. I was actually doing this research on XRP. So XRP, if you guys know, went through that huge crash. Went down to 77 cents from about 290. Just blew my mind. Again, there were signs that this was going to happen. The consolidation zone on XRP was littered with selling. It was not buying. Like, I'm not going to go through and take time to do all the math here, but look, there's 2 green bars, my apologies, 3 within this consolidating pattern. And I can count probably 10 or 11 here. And look at the size difference. That's the difference. It's not just like look at bubbles and count bubbles. Like, my 4-year-old can do that. What we need to be paying attention to is the size. The size shows conviction of the institutions and wells placing orders. So if you have large bubbles up here and they're all red in a consolidating period, which way do you think the market's going to go with a higher probability? Probably to the downside. I'll be honest, guys, humbly admit this, I did not see this metric working like this before it dropped. I really wish I did, because I could have capitalized, I could have exited some of my altcoin positions, even XRP, even people with who had positions in the SPY. You could have taken a hedge here because the data was so stinking clear what was happening within consolidation. So I really do believe this is going to be a game-changing indicator for many of you guys to be able to see what is happening on the charts with Bitcoin. Actually, in fact, let me show this to you guys, because I did this post the other day for all of our members. I showed this to you guys. I said, during this consolidating period right here, we are probably going to get a long squeeze if we see the market, when we get on our long squeeze, head down below 111. Why did I say that? It's because I saw this area here in the market. But out of this consolidating period, which bubble was the biggest? Come on, guys, this is so simple now when you see this. Out of all of this, the highest amount of volume, and if you want to know the volume, let's just go turn on the volume so you can see this. It was clearly buying at 1.9K. This is nothing. 1.25, we've got a larger volume coming into the market, breaking out of consolidation. Which way do you think the market's going to head? To the upside. Okay? I'm not going to sit here and guarantee you guys that every single time there's more large volume to it's going to head in that direction. But from my research, there is a high correlation that where whales place their bets in consolidation, they usually don't shoot themselves in the foot after placing large bets. You guys get my analogy there, right? Okay? So I truly do believe we've kind of stumbled upon something here that it is going to change the game as far as understanding where institutions are buying in the market and giving us an edge in understanding where volume is being placed. There's reasons why institutions place long side and short side liquidity in the market. It's because they're getting ready for the position to appreciate in their favor. Okay? Guys, if you're viewing this on YouTube as like the official release video, there are links in the description to purchase this. If you're viewing this on the Gumroad page, obviously you're on the purchasing page right now, feel free to purchase this. Please listen here. If you guys have purchased indicators in the past with us, we have what's called a Pro Pack in the top and bottom finder. Please do not purchase this on Gumroad. Email us. I want to give you guys a huge discount because we want to honor those of you guys who have purchased with us in the past. So please email in for that. And myself, Jake, or Josh will give you guys that coupon code. Again, those are for those of you guys who have purchased the Pro Pack and the top and bottom finder in the past. You've already spent hundreds of dollars with us. Let us honor you in that. Let us give you a pretty massive discount on this indicator. For everyone else, guys, go ahead and purchase this. I am confident you will become more confident in your trades when you can simply see where the institutions and the whales are placing their big buys and their big sells. I love you guys. Enjoy this indicator. God bless. And I really hope you guys find that this adds an edge to your trading. I love you guys. We'll see you there. Bye-bye.